Swiss Crypto J, your YouTube channel all about crypto and wealth. Hello and welcome to a new Academy video. In this Academy video, I would like to introduce you to my strategy of compounding as well as how I plan my exits from it. I really took my time there, and of course I would love if you would support this video with a thumbs up, and of course write in the comments below, did this video help you, yes or no? Do you have another idea or even a better strategy? Let me know. I would be very happy to have an interesting dialogue with you guys. And now I would say let's lean. So, dear friends, I'm going to show you here how my strategy works. And with any strategy, of course, it's important to have knowledge of just how to handle a chart, how to read, how to spot trends, etc. Of course, you can learn all that in our coaching. I absolutely recommend it to you. Before you lose a lot of money, rather come to our coaching. There you have the opportunity to recognize a really good risk management and also such strategies. Optimal with a compounding is if you, of course, catch the bottom of a swing trade where it goes up again, as there could be here, for example, currently the possibility that we discover here a new start for a new swing trade. That would be optimal, of course. Then you would have the chance to come back up there. Good. But now for you, for this scenario, I have picked out something. I have not picked a huge swing. This is because I want to show you with the exit strategy once again how to get out of a compounding with a trailing stop, for example. This is something really brilliant because it works and you are 100% sure to make a profit. All right, what you need, of course, are these three signs here. I've already faded them in. I'll burn them out again briefly. First, it's important to focus on the RSI, MACD, etc. in the time horizon. If you see that you have a trend reversal in the RSI, a possibility, we find confidence back in the market, there is strength again, that clearly shows the way up. We have the short-term MACD, which has already made a bullish cross on the bearish side, so it's a very bullish sign. And the same, of course, with the long-term MACD. So that would mean to me, if we've currently just seen this time frame here and we've tapped down here, to me that means this would be a favorable opportunity now to get in here and come in conservatively to the upside for compounding. What does that mean for us? We need a budget either way we spin it or stand it. You need to make a budget that's right for you, and that would be, for example, this area now. We would now have an investment of about $. Then, of course, you don't recommend that you get in right away with $, but you break that down, of course, for which you still have opportunities, for example, to hedge a fan technique down. If this would not yet be the bottom here and we have to come here again a little bit lower, then one makes halt again a fan technique in order to come then upwards. Upwards. For the entry, I would recommend that then, so we would have now here on the $. We see a trend reversal, and that could be a very interesting swing for us. Then we go at $. That's our entry, but we're not going in at $. We're going in at 5% of $. times the triple lever. Then we would have a trade at $. That's exactly where we start into this trade. When we start, of course, we have something that plays into our hands first of all, and that is the Fibonacci retracement. That's essentially critical for us to know where can I draw my profits, where do I set my stop loss, how will I plan my rebuy strategy in the future, and so on. So we have now set the Fibonacci retracement. We got in, we got out above the 0236, so above the accumulation, got up. Then I would say now we are over here. The second candle has started. We are in. We are now setting a stop loss to hedge our trade. So we set the stop loss a little bit below the 0236, but roughly attached to the previous support level, that you can still say a little bit of air down there, that we don't just get stopped out at the same level would be optimal. So we are currently in profit now. And this profit, of course, helps us to move forward here. That means no matter how the trade goes now, whether it goes into our cards or not, it is possible that we will be stopped out, but we are in with profit. That's already the first important insight. The second is, where do I build my profit strategy for myself now? Before we even get into compounding, we have to realize profits. The first profits I draw only at the 0.5 level, because the 0.5 tells me after a swing we have broken through a correction phase, so we have completed it. A trend reversal is therefore close, or we are rejected and go down again. That's just the possibility. For this reason, the chance is very high there that you come up at the 0.382 level, get rejected here, and then fall lower. So we are very well hedged here. Just with the stop loss alone, and the 0.382 is actually also always a sign of a pattern. Have we broken out? Yes, no. Have we confirmed it? Yes, no, and so on and so forth. For this reason, at the beginning of a swing, I focus on the 0.5 level. I get the first profits, then I get the second profits, and right from this point at the 0.618, I then start to say, before I take profits again now, I increase the leverage. This increase has a very important feature, because with this increase that I create, I'm taking capital back out of my trade, back into my asset, and so I have more equity available again to continue to work out the strategy. So we've already got about a profit zone here on the 0.786. The 0.786 is a very important decision for me. So I have now taken 3 times here and 20% profits. Now the question is, how do I go? I've increased the leverage, so now I have to buy in. So how do I focus on where to shop again? For this, I already used the Fibonacci again. With the Fibonacci, I see a possibility here, again at the 0.382, which can give, yes, again, a confirmation to come back up. I use my first rebuy. This rebuy is half of the starting capital. That is, if I started with the 250, I come up with 125. But now new with X5. So there's a little bit of a mixed calculation in my trade, which of course pulls the whole thing up. In the same breath, of course, it pulls up my entry price. I'm then no longer at 30,050, but I am pushed significantly upwards. For this reason, we will of course have to adjust the stop loss again afterwards. Currently, however, I would say that is not yet enough to pull my stop loss into the red. If so, then you can manually tighten it a bit. The second rebuy will take place a little lower. In the case there, one orients oneself again at the previous candles, plus, minus, support, resistance. Of course, you can learn a lot from our coaching to recognize such trends. We first picked up our first rebuy here. We then shot down here, picked up the second rebuy. And now, of course, we have the opportunity. And now, of course, we have the opportunity to pull up our entry extremely massively. The second rebuy is again the same size as the initial capital at that time. The only difference, no longer X3, but X5. So it's a completely different asset. Now, it's important that with the first compounding, what we've done here, we've drawn our profits, is the first step for us to decide, where do I put my new stop loss? We can adjust the stop loss very well here by pulling it up. We take the stop loss away and pull it up to our second rebuy. So the average price is still a little bit lower. I started at 30,000 after all. So the average price is still lower. So I would still be in profit. The only thing to watch out for now is to take Fibonacci away, and of course our potential profits. We don't need those anymore. We've realized those. We've come back down from up here. That means we have formed a new HI and a new low. So I have a chance to rebuild a Fibonacci here. And the Fibonacci, it shows me now, again, new levels. And these new levels are important for me, again, to focus. That means we did everything right, got in, tightened stop loss, profit pulled, increased leverage, and bought in again. And now we have the same game again. And in a swing trade, of course, you can make this game all the more as you want. But you also have the possibility, especially day trader then says at the end, okay, now I have seen enough. I now make a trailing stop and go to sleep, and then also have my peace. I want to demonstrate that to you here now. So I have not taken a massive swing. You could have played the game 3 or 4 times now, but we are now taking a very clear strategy here, how we can now proceed. Okay, good. So we've made all our entries. We now know where we stand. Now we have to see where we can make the new profits. And now, different from the first entry, I'm not focusing on the 0.5, but already on the 0.382 level. There I already want to take my first of the first profits. I also have a bigger trade, a higher leverage, so I already have accordingly more profits there. So I already take my first of the first profits at the 0.382 level. Then at the second, of course, at the 0.5 level, and then again at the 0.618 level. And before we get back to the 0.786 level, it would then be the same again. We would focus again. Where would be, for example, for the next swing, again the same Rossley game. That is, we would again increase a lever, again look for new entry points to build the whole thing. In this case, with the Rexit strategy, as I would do just now, you now have the opportunity to focus on that. Anything that is at the 0.786 level is a very important point for us. That means we have a level here that we are not using now to continue our compounding again, but to say from this point here, I would like to activate my trailing stop. And this trailing stop applies from the 0.786 level with a trailing stop of $1,500. $1,500 is a size that you can figure out for yourself individually by taking parts of candles and going somewhere and seeing the big candles of plus minus $1,000, $5,600. Then after that I would focus, because of course those were always the bigger moves. The higher we get, the lower we can go. So of course this TS here is pulling beautifully upwards. If we then reach the top here, from here back again, 1,500 down, that would be about here. We would have been stopped out at 46,000, in this example 700. That's compounding with an exit strategy, that always works, because you just often don't know the top. Often not known. You don't know where the end is. Of course, if the whole thing goes all the way to the all-time high, then congratulations, you've done everything right. But nonetheless, of course, you have the opportunity to compound here, and compounding can go all the way to levers X, Y. But as I said, this technique applies. You have to stay calm. You have to be patient. You have to be 24/700 in the computer. So you can't just do it now and then run away again. I don't recommend that at all. And as I said, there is also a certain amount of risk management. For example, I have already told you about the fan strategy, which you can do here, for example, in the event of a possible swing entry. It can be that one forms here again deeper lows, then one would have the chance to build up that with a fan strategy still a little bit bigger. Accordingly, of course, the resolutions here would also adjust again. I give it so according to these rules of thumb. This is my rule. There are any other possibilities and strategies, but this strategy, if you have understood it and would like to try it out, then use a test account if possible, or do it on paper. Yes, paper trading. Otherwise, if you don't want to do without it, then please try it out with a small leverage and a small amount. And then what would interest me, knock it down in the comments. What do you think about this strategy? Is it good? Is it bad? Have I forgotten something? Would you do it differently? Or would you like to test this strategy yourself? I would look forward to a communicative exchange. I say goodbye from Switzerland. Stay healthy, and until the next video. Bye-bye.